Hello, good evening. It's Adil here bringing you a review of the European markets for the trading session Monday, the 15th of February 2021. Okay, please be sure to obviously visit my site there and obviously access my Twitter feed where I'm obviously more active. So www.inter-market-analysis.com. If you do go on my website, you will find details in terms of joining the live analysis service where I obviously trade in real time, give my entries, exits and analysis etc. throughout the day as well for those that are interested. Okay, so in terms of the European markets, it's certainly been a rally towards the Friday, which is quite impressive given the fact that Mr. Draghi certainly seems to be taking away any potential risk-off bias in the market to a large extent. Even with a stronger euro, than obviously European markets are certainly have done really well. Now we did get a wobble obviously midweek, but then the markets obviously have recovered since then in terms of the risk parity. Okay, so let's try and give you an insight in terms of European indices. Always, first it's the German DAX. Now the German DAX is failing to break above double top even with the Draghi rally. So FTSE MIB certainly seems to be leading the pack at the moment in terms of the bullish bias. As you can see here, the Italian index certainly rallying, breaking above that gap level, key obviously instrumental gap level, and again the next potential gap is seen at 25,000, and it certainly seems to be leading the way in terms of the risk in the European markets. Again, previous resistance equals support is held. I was expecting this gap level obviously to hold, as you can see here, but obviously we pushed above that, we've broken above that, and it looks like the bottoming tail here is indicating a potential thrush or move higher. In terms of Euro USD, let's just bring this up for you as well. Obviously on the back of Draghi, we've had quite a prolific rally in the euro as well. Certainly seems to be negating any potential risk or scenario there. In terms of the next potential move, you've seen at 123.50. Let's see if that obviously will hold for now. Obviously the market certainly is very bullish on the back of obviously Draghi, so take that certainly on board. Now I did expect a certain weakness in terms of European indices given the fact that we've got France that's still teetering, we've got Germany that's still worried in terms of the reinfection rates and the mutations as well. Nevertheless, obviously as you can see here, weaker dollar as well on the back of Trump's potential chaos there politically, and also obviously rising mutations there, and also in terms of weaker obviously economic data from the US. But nevertheless, inflation expectations were stronger on the Friday, going into towards the end of the week in terms of dollar, and that certainly helped it. So there's a lot of fundamental currency if you are trading currencies at the moment. Again, with regards to COVID, again the differences between them. In terms of the markets going forward, let's just have a look in terms of risk. Obviously Draghi will be the main key, and obviously one of the key indexes to watch is the double top on the German DAX. Now the two candles have traded within the inside bar from the Wednesday the 10th, so again watch out there. Given the fact that we've got a double top on the German DAX, and provided that holds for now, bias certainly remains bearish for me. Okay, we've closed this gap here at 13,840 after that wobble, and the market certainly seems to be coming back quite strongly at the moment. So let's just see if we can hold this resistance level here. The next resistance seen at 41.50. If obviously the German DAX does break out on the back of the FTSE MIB breaking out in terms of the Italian index, then obviously you have a very bullish scenario on the back of obviously vaccination euphoria, okay, in the back of obviously easy monetary policy as well, given the fact that the Fed certainly said last week as well the easy monetary policy is set to continue on the back of fiscal stimulus as well. Now the French CAC certainly pushed higher quite impressively there going into the close. I actually have a short trade on the French CAC at the moment on the back of a double top and looking for a lower high on the fib 75% retracement. That's when I went short around the 5,692.93 zone. Stop loss at 5,750, so expecting a flush lower. We have had New Zealand now, Auckland I think, going back into lockdown. Concerns regarding mutations over the weekend as well. Talk of the AstraZeneca vaccine not being effective against the B1351 mutation or variation. So again, watch out in terms of the vaccines potentially failing. I think the J&J is the only one that's certainly effective against that. So let's see how that plays out. Obviously vaccine wars certainly seem to be centre stage as well in terms of Europe. So again, watch out in terms of the obviously movement there as well. Again, French CAC from my perspective, given the daily chart hasn't broke above double top, German DAX hasn't broken above double top, so again bias remains bearish. We've got two unfilled gaps in a daily chart in terms of the French CAC, so watch out there. In terms of the FTSE 100 then, so this is the index we're going to watch. I did attempt to short the FTSE, going down, back down to 6,450, potentially even testing 6,400 on the back of obviously a stronger sterling and the back of obviously a hawkish BOE. But that certainly hasn't happened. Obviously commodities are certainly rallying. We've had oil prices pushing higher, and that certainly seems to be the major catalyst in terms of the inflation, obviously a reflation trade. Let's just have a look at the GBP USD. As you can see here, a thrust high in GBP USD generally indicates the FTSE to move lower, and that hasn't been the case. It has subdued it for quite a while, but that hawkish BOE scenario certainly isn't playing out in terms of the FTSE. And again, that's obviously been helped to a large extent, as you can see here, Brent crude. Quite a prolific rally there on Brent. Okay, now I wasn't expecting a potential reversal given the fact that we have on the daily chart exhaustion to a large extent. Certainly was expecting a move lower here, looking for a reversal, previous support equals resistance. And given the fact that we've rallied quite substantially from the $55 zone, it's very, very impressive to say the least in terms of the chart of Brent, given the mutations and the variations. But the markets are focusing on the reflation trade, number one, given the fact that yields are starting to rally, and number two, they're focusing on the vaccination euphoria as opposed to the mutation. So again, watch out in terms of the scenario there. It certainly seems that the quarantine concept, potentially you have to get tested twice and then pay, I think, almost 2,000, is it, or 1,700, I think, in terms of the 10-day quarantining, etc. It certainly seems like that's the catalyst for the demand for oil. Again, I'm baffled. I'm certainly surprised. Okay, in terms of that, obviously Bitcoin certainly rallying as well. So one would argue that obviously all that stimulus, etc., and all that free money certainly is obviously adding to this speculative wave in terms of oil and in terms of commodities, etc., etc. Okay, so daily chart as well, as you can see here, quite a substantial rally here in terms of the obviously Brent crude. Certainly looking for exhaustion here, given the prolific rally that we've had. The FTSE 250 double top still remains. Okay, until we break through that. Again, a stronger sterling certainly is negative for the FTSE 250 in terms of exports. So certainly take that on board. And the FTSE's, as you can see, 60-minute chart, we've built a base. Potential inverted head and shoulders formation. Your next potential resistance is seen at 6,610. If you take that out, then obviously you've got resistance at 6,700, and that will be the next one to watch. Although there is a potential short-term resistance here around the 6,650 zone. Watch out for that. Previous support equals resistance, although it hasn't really been very obedient, to say the least. But nevertheless, watch out for that level. Quite an impressive thrust from that 6,480 zone. Quite a few bottoming tails, and obviously the buyers certainly come in quite strongly, obviously helped by the strength in commodities. So watch out in terms of the next move there. Daily chart on the FTSE again, it's basically a massive H&S formation to me at the moment. Again, it's not at the top of the market, so again, take that into consideration. Also, given the fact that US equities pushing to new highs. If you look at the S&P, we broke out to all-time new highs in the daily chart. The 60-minute chart, quite an impressive thrust, given the fact that we held gap fill. And then obviously we'll push to the high going into the Friday. So again, that's going to help risk to a large extent. And obviously focus certainly remains on the obviously monetary policy. Highly accommodative in terms of QE. Obviously Fed stated that last week. And obviously they're not willing to take the foot off the gas in terms of the obviously dovish view. And obviously the focus remains as well in terms of the 1.9 trillion fiscal stimulus. And everybody wants to bake that into the cake, adding the fact that obviously vaccine euphoria as well, and it certainly seems everybody wants to buy the US equities, which tend again to have the knock-on effect in terms of European indices as well, especially with regards to the FTSE leading the rally on the back of the Draghi euphoria. So interesting scenario. Now let's see in terms of one of the obviously key trades from my perspective now will be the Kiwi. I'll be looking at that potentially to short, given the fact that they're going back into lockdown. Certainly a bearish scenario. Again, potential H&S formations already set up here on the daily chart as well. And certainly from my perspective, if you are trading, obviously, if you are trading the FTSE, or if you are trading intermarket analysis, a potential drop in the Kiwi certainly signifies a dollar strength, which indicates risk off, and therefore obviously FTSE follows suit in terms of commodity selling off as well. So watch out in terms of the obviously scenario there. We have had the back and forth with regards to China as well. Biden and the WHO in terms of the origins, so keep an eye on that, and obviously Trump impeachment as well. Again, like I said, if I focus on just the fundamentals alone, these videos will be very, very long. Again, just going back to the FTSE, that's the main obviously focus. So daily chart, we are looking at resistance around the 6640 zone, which again is a fib 50%. If the market obviously pushes higher, then you are looking at fib 61 to 75%. Certainly looking for that to hold. The only reason why that wouldn't hold is if obviously sterling starts to move lower, and obviously commodities continue their super run higher, and obviously the vaccination situation, also the potential talk of easing of lockdowns as well, certainly would help FTSE. Anything in terms of those variables being negative would obviously hurt the FTSE. US equity selling off again would hurt FTSE, and this right shoulder on the HNS formation daily chart certainly be triggered, and a potential break of the neckline would obviously ensue. So keep an eye on those variables. Again, it's day to day. I can't predict or forecast. That's not what traders do. All we do is react, okay, and we keep our stop losses in, and obviously emotions out as always. Okay, so again, the key zones, drawing the horizontal levels in, as you can see here. There's no secret to this. Okay, this is something that everybody obviously is able to do themselves. Again, previous resistance equals support is at 6610. I think we did push as high as 6610, I think, after hours in terms of the FTSE, so watch out for those levels. Again, if you continue to thrust higher, then 6640, 6650, 6670, and ultimately resistance at 6700, and that will be a key area for me potentially to short the FTSE. Would be very, very tempted to short the FTSE there. In the meantime, certainly looking for weakness in the European equities from my perspective. How long will this Draghi euphoria last? I mean, again, the whole concept of bankers obviously mixing with politics isn't good, and doesn't really have much of a successful track record, and always ends in tears from my perspective. But the markets want to believe that, so let them believe it. Let's see how the markets react thereafter. Again, we're just trade traders. I'm just a trade trader. I'm looking to obviously get in and out, and happy to switch my bias and my perspective very, very quickly if I'm proven wrong. Okay, so again, if you do flush lower on the downside, your key support is going to be 6570. Watch out for previous resistance equal support. Obviously, continue to push lower, then you are looking at 6500 support again, and 6480 remains a bottoming tail there in terms of the downside. So that's the view, folks. Wish you the best for your trading week ahead. Be sure to obviously follow my site. Take care. Goodbye.